Hey, what's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 20th of 2018. Well, folks, today we have a decent amount of things to talk about here on the DataDash channel. As always, I want to spend a decent amount of time taking a look over market trends, talk about what I'm seeing currently in Bitcoin, as well as the broader altcoin market. But along with that as well, I want to spend a decent amount of time talking about a chart and a comparison that I've been seeing a lot recently, and that is the comparison of the kind of evolution of gold markets and Bitcoin. So I want to spend some time talking about the good and the bad in this comparison, what's important to know about this, and to not let bias on either side really take over. So we've got lots of things to talk about. Let's not push it off any longer and dive right into the video. So first off, taking a look over here on general markets, we can see that there's a few players in the green for the past few hours, but for the moment, most things are in the red. This is following, obviously, after a wonderful week of price action. We've been seeing not only strength in Bitcoin, which is still generally holding right now towards its highs, but we've also seen altcoins gaining back valuation a tad bit as well. Most, however, have not been able to outpace Bitcoin, and because of that, we have seen continued growth in Bitcoin dominance, which we'll take a look at in just a bit. But this has definitely been a very, very big help here in regards to the more positive trend in regards to the long term, or at least the more positive viewpoint in regards to trying to analyze trend, because we've been hoping, or at least I have been, that Bitcoin and cryptocurrencies as a whole would hold a general market cap as a total currency market above $250 billion. And we have continuously, all the way since back here in February, been able to maintain this level. Again, if you take this to the all-time chart, it's becoming obviously clear that this is starting to form, at least over the next few months, as a base of support, hopefully. So this leads me towards, again, what we'll talk about with Bitcoin, and I've been already talking about for quite some time, that I think you're going to see Bitcoin from this level hopefully test towards 10,000. And if we get an announcement of an ETF around that time period, we will go towards the higher levels towards the end part of this year or early 2019 that I've talked about, around $40,000 to $50,000. Again, that's going to be the paradigm shift here, guys. When the ETF comes out, it opens so much more liquidity to crypto markets. But in this case, again, we're keeping things more in the short-term perspective here. We want to hopefully see that Bitcoin can retest towards 10,000, and with that, altcoins obviously will follow, and we could very well get towards a higher valuation range around $300 to $400 billion in the short term. From there, we'll have to see if we can test towards higher levels with some kind of catalyst that can push markets further from where we are. Going on here, though, I have to admit towards one thing that has definitely got me a little perplexed, and that is Bitcoin market dominance rallying well above altcoins. Again, we've been saying how altcoins haven't been able to keep up. Most of this has been from a drop of Ripple, Ethereum, and generally the other coins. We have seen Bitcoin really holding strong over the past few hours, whereas altcoins have started to correct. So this is really giving me a feeling that we might have a more prolonged growth of Bitcoin dominance, where altcoins and being risk averse might not be the top trend right now. And the reason that is because if we have a Bitcoin ETF, this is going to play out much like that of the Bitcoin futures contracts. The build up towards the announcement of the futures contracts really led Bitcoin to gain dominance in the market. If we remember back, for those of you who are here back during last fall, I think it was around September and October, again, during that time period, everyone was a Bitcoin maximalist. Everyone was completely pro-Bitcoin at that point. And I was telling people, I was like, Bitcoin has been the play right now. This is good. I've been mainly staying in Bitcoin, and I had some altcoin positions. But I was like, guys, just wait. After Bitcoin, altcoins are going to do very well. And it was one of the best calls I made. Again, I make some wrong calls, I make some good calls, but that was probably my best call in the sense that, guys, we are going to see altcoins have a sweeping rally after Bitcoin gains a decent amount of market dominance, and we saw that. We saw a massive flush out here in Bitcoin dominance because this is when all the altcoins started to do very well during December. So again, keep that in mind here, that I think that we might be at least over the next same month or so, seeing Bitcoin dominance gain. And then once we have a confirmation on the ETF news, not only will Bitcoin obviously do well, but also other coins will follow. I know you guys probably think I'm crazy standing on my position that we're going to hear about a Bitcoin ETF this year, but still set on the idea, guys, because there's been lots of developments kind of going on behind the scenes in a sense. But anyways, I want to spend some time here to talk not only about Bitcoin's price, but also talk about this comparison to gold. I think this is a very interesting comparison, especially with how the chart is presented. And there's some benefits to the chart, or some good things about it, but also some inherent flaws with how they present the chart, a little bit manipulative in a sense. And we'll talk about that. But I like the key point that it's trying to bring. Going on here, though, I want to focus on the sense of the line of resistance for Bitcoin and how we are pressing towards not only providing price strength confirmation in Bitcoin for a potential rally, but a potential breakout over this level that has held us down for so long. Again, we have been talking consistently about the comparison back here in 2014, where Bitcoin was able to hold support a variety of times and then eventually break through the line of resistance and have a nice small rally, around a 50% movement in the price of Bitcoin. And obviously altcoins followed as well, much like how I think they will this time around. So what I'm generally looking for here after these really nice days of obvious price action in Bitcoin, but along with that as well, the price strength confirmation holding amongst these levels is a breach above this previous resistance level over here, which has acted as support in the past, and a breach amongst this line of resistance. The MACD is looking quite nice. I've checked over most indicators. Again, we had been definitely in an oversold environment in cryptocurrencies back a few weeks ago, and I think we have enough momentum here, after being in a few months of correction, that we could at least see a short-term rally, a little bit of a short-term bounce in markets. And that's going to possibly lead us over the next, say, month, I think through August, it's going to lead us towards $10,000. During that period, during August and September, that is where we're most likely, I think, to hear about a Bitcoin ETF announcement, or at least, talks of, for example, being able to build one that can launch to market with the SEC's new approval of an ETF kind of funnel, in a sense of being able to bring new emerging ETFs to market much faster, so long as they follow certain principles. We're going to have to hear how the developments of that go, and if that's going to be able to expedite a Bitcoin ETF, or if we just simply get the SEC approving one of the proposals submitted by either the CBOE or a variety of other proposals that we have coming down the pipeline. So going on here, let's go ahead and talk about this comparison. This is the chart here that I've been seeing all over the place. I'll go ahead and pull up the chart here, zoom in a little bit. It's a little bit pixelated. They obviously didn't probably put too much of a high def resolution on this because there's a little bit of manipulation with this chart, but I do like the point that this chart is trying to make, and I'll talk about the good and the bad as we go through this. So as always, I want to be critical here first. I want to point out the bad here. So they're basically trying to show the perspective here of how Bitcoin and gold markets are showing similar trends in the long term, and what happened once the gold ETF was introduced. Obviously, we have some very similar looking price action here, and along with that as well, once the gold ETF was introduced, we saw a parabolic run-up. Now, again, we've been talking about on the channel the importance of Bitcoin ETF, and I will say just as it was important for gold markets, it is very important for Bitcoin and cryptocurrencies. The reason it's important is because you're opening up pension funds, you're opening up investment banks, you're opening up a whole market right now that cannot trade cryptocurrencies, okay? So this is a really, really exciting topic of an ETF. But I'm not going to sit here and say that this chart is on a time frame basis. In fact, they even point out here that this peak was back in 1980. And over here, the gold ETF, it's interesting how they didn't mention the date there, because the gold ETF was produced in 2003. Now, you might already see the point here. This chart is not to scale. In fact, I think there was a Reddit comment here that put it best, that the creator of the chart must have been absent the day that they taught X and Y axes. And this is very, very important. When we're taking a look at this graph, we have to understand that this bear market, as well as the run-up, was a multi-year bull run, and then also a more than 20-year bear market for gold before we really saw a rise back in prices. And not to mention as well, this is something that we have to be fair about, but again, this applies, as I'll show in the next chart here, to the S&P 500 and a lot of other things, that's not even inflation adjusted. If we adjust for inflation, gold had a very, very steady correction from its highs compared to what we see on the chart here, and really didn't see a full-on rally until we obviously got the ETF, but didn't even break out to all-time highs inflation adjusted back in 2011. But again, we can see that with the S&P 500, that what appears as a massive rally over the long term really was about a 5 to 6 increase in the same time period of gold historically. So again, not really so much of an argument against it, just something interesting to point out. The big thing here, though, that I want to point out that I do like about this, outside of the fact that this does not account for the actual gains, we can see that this is a 300% growth. In this case, if Bitcoin were to do even just a movement back up to its previous highs, that would already be a 300%, roughly around a 300% movement, generally speaking. And if it were to obviously break it at this kind of what appears in the chart at this rate of growth, this would be probably 40 or 50,000 Bitcoin, much, much higher percentage of growth, but the time frame is a little bit off. Once we factor the fact that the X and Y axes are not coming into account and that the charts here have been a little bit squeezed, I do like the fact that this points out towards the kind of trend we are going to find in Bitcoin comparative to gold. And we have seen very striking similarities here. We've seen an initial parabolic run-up that gold did experience. If we take it back here, back towards the early 70s towards the late 70s to early 80s in this sense. We did see a very nice parabolic run-up in gold and precious metal markets. Silver followed as well with an even more parabolic run-up, and then we saw a cool down afterwards. And it does look very, very similar to that of, for example, Bitcoin in this case, but on a much longer time frame in the case of gold. So outside the fact of time frames here, the reason why I do like this chart is because it does show us something. It shows that Bitcoin itself is becoming a much more mature market. It's becoming there's a variety of different labels people are going to toss at it. Some people will say it is a peer-to-peer digital currency. Some will say it's a digital asset class, a store of value. Whatever you want to yell at Bitcoin and call it, whatever you want to name it. But in this case, I think it's very important to show that as this market has cooled down, I think it's putting us in a position where we are very much going to see a Bitcoin ETF. It's not going to take 20 years for an ETF to come out. And the reason why, for example, precious metals probably took so long is the fact that it wasn't seen as an interesting asset class or as something that, for example, should be owned by the average American. In this case, in the early in the early 2000s, in this case, when we had the gold ETF come out, this was really the selling point when gold became a more retail market, in this case, something that average people held. For years, gold was pretty much caught up in Forex and commodities markets that were traded by traders. They weren't really owned by the average person, very much like cryptocurrencies nowadays. If you're owning crypto, most people are very active in trying to learn technical analysis, trading these markets, comparing it to traditional markets like we do on the channel. It's towards a specific niche audience in the grand scheme of things. And when you bring an ETF to market, it matures the market in the sense that it opens the door for a variety of other people to invest in it. When you have an ETF, people can easily put it in their pension fund. It can get into fixed income markets that are multi-trillion-dollar markets. We talked about BlackRock recently. Excuse me. We talked about BlackRock recently that manages ETFs for clients, that holds trillions of dollars of assets, that right now cannot invest in cryptocurrencies until the ETF comes out. So I think in that sense, we can see the growth of a market here. We can start to see that Bitcoin has much more room to grow in a very relative short period of time over the next, say, a few months or a year or so. And I'm really excited about that in that case because it's going to open up the market of cryptocurrencies to much more people. And with that, we can see a much more longer-term uptrend in the sense of cryptocurrencies where even December, which seems so crazy, will seem like a blip comparative to, or a bump in the road comparative to what we're going to see for overall cryptocurrency markets. So anyways, again, there's some good and bad with this comparison, and I think there's other things you have to factor as we talked about throughout the video. Nonetheless, in the short term, charts looking very nice for Bitcoin. The little bit of an increase in liquidity that we've gotten over the past few days is really good. Again, I can tell you guys from the ICO space to the OTC market, the signs that we aren't really seeing right now, at least on the chart here, there is a lot of optimism coming into the cryptocurrency space. So I would say to remain patient, play it smart, trade smart, stay safe, and I will see you guys in the next video. Stay tuned.